What if I told you that you could double your money, not in years, but potentially in months, or even weeks? Does that sound too good to be true? Well, stick with me, because in the next few minutes, I am going to pull back the curtain on the world of Forex trading and show you exactly how it almost possible, even if you're a complete beginner. We're talking real strategies, real examples, and a clear path to get you started. So if you're ready to take control of your financial future, do me a quick favor. Smash that like button and subscribe right now, because you are not going to want to miss a single second of this. Let's get into it. First things first, what exactly is Forex? Don't let the jargon intimidate you. Forex, or FX, stands for foreign exchange. It's the largest, most liquid financial market in the world, where trillions of dollars are traded every single day. Think about it. When you travel to another country and exchange your dollars for euros, you've participated in the Forex market. As a trader, you're doing something similar, but instead of buying currency for a vacation, you're buying it with the goal of selling it for a profit. You're speculating on whether one currency will get stronger or weaker against another. Let's look at a real example. This is the EUR-USD pair, one of the most popular pairs to trade. When you see this chart, you're looking at a battle between the euro and the US dollar. If you believe the euro is going to strengthen against the dollar, you would buy the EUR-USD pair. If you think the dollar will get stronger, you would sell it. It's that simple. You're predicting the direction of the market. And the best part? The Forex market is open 24 hours a day, 5 days a week, so you can trade whenever it fits your schedule, whether you're an early bird or a night owl. The key isn't just guessing. It's about making educated predictions based on smart strategies. And that's exactly what we're going to cover next. Now, before we talk about making money, we have to talk about protecting it. This is the part most beginners skip, and it's why so many of them fail. Let me be crystal clear. Risk management is not optional. It is the foundation of your entire trading career. Without it, you're not trading, you're gambling. The most powerful tool in your risk management arsenal is the stop-loss order. Think of it as your safety net. A stop-loss is an automatic order you place with your broker to close a trade if it moves against you by a certain amount. Let's say you buy EUR-USD at 1.0850, and you decide you're only willing to risk 20 pips. That's a small unit of price movement. You would set a stop-loss at 1.0830. If the price drops to that level, your trade automatically closes. Yes, you take a small, calculated loss. But what's the alternative? Without a stop-loss, a small loss could turn into a catastrophic one, wiping out your entire account. Professional traders live by their stop-loss orders. You should too. Another crucial rule is the 1% rule. Never risk more than 1% of your total trading capital on a single trade. If you have a $1,000 account, the most you should be willing to lose on any one trade is 10. This discipline ensures that even a string of losses won't to knock you out of the game. It allows you to survive, learn, and ultimately, thrive. Remember, the goal isn't to win every single trade. That's impossible. The goal is to make sure your winning trades are bigger than your losing ones. Alright, now for the exciting part. The strategies that can actually help you double your money. I'm not going to overwhelm you with a dozen complex systems. Instead, let's focus on 2 powerful, beginner-friendly techniques that have stood the test of time. The first is what we call trend following. It's based on a simple, timeless principle. The trend is your friend. Markets don't move randomly. They move in trends, either up or down. Your job as a trend follower is to identify the direction of the main trend and trade with it, not against it. How do you spot a trend? In an uptrend, you'll see a series of higher highs and higher lows. In a downtrend, you'll see lower highs and lower lows. You can use simple tools like moving averages to confirm the trend. For example, if the price is consistently staying above the 50-period moving average, that's a strong sign of an uptrend. Your strategy is simple. Wait for a pullback, a small temporary dip in price, and then enter a buy trade in the direction of the overall uptrend. You're essentially buying the dip, but in a smart, strategic way. By riding the wave of the market's momentum, you dramatically increase your probability of success. The second strategy is support and resistance trading. Imagine a price chart as a room. The price is a bouncing ball. The ceiling is the resistance level, and the floor is the support level. Resistance is a price level where selling pressure is strong enough to stop the price from rising further, often causing it to bounce back down. Support is the opposite. A price level where buying pressure is strong enough to stop the price from falling, often causing it to bounce back up. Your job is to identify these key levels on your chart. Look for areas where the price has reversed multiple times in the past. Once you've identified a strong support level, you can look for opportunities to buy as the price approaches it, expecting it to bounce up. Conversely, you can look to sell as the price nears a resistance level, expecting it to be rejected. When you combine this with other confirmations, like a candlestick pattern showing a reversal, this becomes an incredibly reliable strategy. These two techniques, trend following and support and resistance, are the building blocks of profitable trading. Master them, and you'll have a powerful edge in the market. So, we've covered the basics, risk management, and two proven strategies. But how do you actually double your money? The secret ingredient is the magic of compounding. Albert Einstein supposedly called it the eighth wonder of the world, and for good reason. Compounding in trading means reinvesting your profits to generate even more profit. Let's look at a practical example. Say you start with a $1,000 account. You follow your rules, manage your risk, and you manage to grow your account by just 10% a month. That's $100 in the first month. Now here's where the magic happens. So there you have it. A beginner's roadmap to the Forex market. We've demystified what it is, armed you with the essential rules of risk management, and given you two powerful strategies you can start testing today. The path to doubling your money isn't a secret. It's a system of learning, discipline, and consistent execution. You now have the foundational knowledge to take that first step. Are you feeling motivated? Are you ready to see what's possible? I hope you are, because this is just the beginning of your journey. I'm incredibly excited about what's next for you, and I want to be there to guide you every step of the way. In my next video, we're going to dive deeper into advanced trading techniques, including the specific candlestick patterns that professional traders use to pinpoint their entries with incredible accuracy. You absolutely do not want to miss it. So, if you got any value from this video, please give it a massive thumbs up, and most importantly, make sure you are subscribed to the channel with notifications turned on. That way, you'll be the first to know when our next lesson drops. Thank you for watching, and I'll see you in the next video.